All right, welcome back to Getting Past the Premium, everybody. Here with a great conversation today with Harrison Brooks from Reagan Consulting. Excited to get your perspective, Harrison, on kind of all things insurance industry today. But before we dive in, welcome to the show. How we doing? It's a warm Friday out there. You're down in
Yeah.
Atlanta. How are things down there?
In Atlanta, things are good. College football's back, so I'm loving it.
Yes.
Last night, my Tar Heels squeaked out a last minute victory with a field goal, so we'll take it. I can't, it's not pretty, but it's a victory. So
Yeah.
we're doing well. So
W
doing
is a
well.
W this time of year, that's for sure.
Sure is.
Um, Absolutely. So, give a little bit of your background, and then what you guys do at Reagan, and I know it's wide ranging, but I also think folks out there maybe don't understand actually everything you do. Familiar with some of the reporting and stuff like that, but walk through your background and what you guys do at Reagan.
For sure. So I've been here at the firm about 10 years, coming up on 10 years in November. And my background before coming to Reagan was more in the finance world, think traditional like Wall Street and then private equity investing in different industries. And then saw the light and came and joined Reagan, and it's been fantastic. So been a student of the industry for the past 10 years. And what we do at Reagan is really help, I would say, business owners and growth leaders of agents and brokers accelerate their goals and achieve their objectives of growing their businesses. So a lot of times you might see that we were involved in a transaction or helping someone sell their business or buy another agency or two agencies merge together. It's definitely something we do, but it's only like one pillar of what we do. So in our name is Reagan Consulting. So Bobby Reagan started our business 25 years ago as a consulting shop, and we really value that. We hold that true today. So we help agents and brokers, hey, where do you want to be in 5 to 10 years? How do you get there? What growth strategies should you be thinking about? How do you move the needle forward? And sometimes acquisitions are part of that, but too often it's too much of the story and the block and tackling of organic growth, hiring producers, training them, developing them. And like we're hosting coming up in a couple months down here in Atlanta an event that's like a 24-hour producer recruitment and development. How do you do it? Best practices, sharing roundtable conversations about that topic and that topic only. And then we do agency valuation, helping owners establish how much their businesses are worth, to set up perpetuation plans to make sure independence can be carried forward in the next generation. And all of that is underpinned with industry benchmarking and a lot of facts and figures. It's not necessarily opinions. So hopefully some of the stuff I say today is supported in some
Yeah.
fact and not just made up. So looking forward to the conversation.
Yeah, for sure. Well, that's what I mean. I know you guys have your hands in, a lot of different areas in the industry. And so I think we're in a challenging market in general right now, as well as so from the insured perspective, hard market coverage perspective, and then also from the consolidation perspective, which is, a massive deal over the last 5 to 10 years. And then you brought up the organic growth side, which, I kind of want to start there because it seems like, outsider looking in a lot of the conversations I have, that acquisitions have become such a focal point for growth in firms, or going out and buying books and things like that, that the organic side of how do I grow and bring on new clients, it just seems to have somewhat taken a backseat. And we talk about it a lot on this show about how you can do that. But what are you seeing in the industry and firms you talk to? I mean, is that the case, or do you feel like you mentioned, it's just that the acquisitions and things are much more high profile, so it feels that way?
I think agency owners at their core know that organic growth is the lifeblood of their firm.
Yeah.
If you're not growing organically, your firm's not going to survive. And I don't even say survive; it's not going to thrive.
Yeah.
Because there's a lot of agencies out there that honestly don't really care about growing the top line as long as they're profits and they can take home a certain amount of money every year. And there's nothing wrong with that. I mean, like, look,
Mhm.
if you're buying that boat and you've got that lake house and things are good, it's a fantastic business. And but it's just it's most of the clients we're working with are growth minded. It's in their DNA. They can't help but want to grow their business and continue to do that. So I would say independent, privately held, locally owned agencies that we work with, that's what they have to do because they don't have a big checkbook to go out and buy another agency. So they have to be good at it. And then I'd say the institutionally backed, and when I say institutionally, like the world, the seat I used to sit in, the private equity world, investing in agents and brokers. And by the way, there's a reason they're doing that because it's a phenomenal business and it's a great place to put your money, right? So like, my challenge to my clients is like, okay, you sell your firm, where are you going to put that money? And so I do think that over the past 5 to 10 years, some firms, not all, that are institutionally backed have taken their eye off the ball in terms of organic growth. And now they're waking up. The market's starting to soften a little bit in different pockets. And their growth just went from double digit industry average 10%, organic growth on the commercial side down to 8. And 8's still good, but 2 percentage points in a quarter, 200 basis points is a lot. And it's like, oh, well, let's start growing organically now. It's like, well, okay, that's a lot harder to just like turn the switch and
flip a switch on that.
It is. So I think people know it. I think doing it is significantly harder than people give it credit for. So it's not an easy task, but I do think people are talking about it. I think once you get past kind of the cool topic of M&A, people then are like, okay, but the majority of our growth is going to be organic. So like, let's talk about that. And I'd say most of all of our clients are very much focused on it. I mean, maybe for like a season, they've had the shiny object syndrome where they've taken their eye off the ball, but they come back, then they see that and they invest in that organic growth.
Yeah. Yeah. And I think that's great perspective. Do you, it seems like there's also, because of the consolidation in the industry, there's like almost a widening gap to the smaller mid-sized firms and then, ABC Letterhouse, big national firms. And then every time you see a big national buying up the small to mid-sized firm, it only exasperates that. Now, there's plenty that are starting, scratch agencies and coming out of those that aren't happy and bolstering that number of independent agents. But I look at that as an opportunity for small and mid-sized firms that are doing the right things, that are focusing on organic growth and bringing value to clients. But how do you see that in the aggregate across the industry? Is that a positive for those that have the focus on, they're smaller, more nimble, that can, drive value to clients against maybe the big letter houses or big national shops?
You can take both sides of that argument. Correct. I recently was doing a talk with some agents and I asked that very question. I put up a chart and it was like, hey, 10 years ago, the gap between the 100th largest broker and the 10th largest broker was like $500 million in revenue. Today, that gap's like $2 billion in revenue.
Jeez.
So it's like 4x over the past 10 years. And a lot of that through acquisition, right? So yeah, the data supports what you're saying. That phenomenon is happening. So I'll take the opportunity first because I'm a half glass full kind of guy. So the opportunity is this, right? XYZ firm sells. They pick the person that gives them the highest dollar, and they're not necessarily thinking about other things. And you can't blame that agency owner. I mean, that's their family's wealth, it's their retirement, but at the same time too, there's maybe things they didn't see or think about, kind of thinking about. And so what happens is the client experience begins to suffer, right? It may be account minimums for producers in terms of getting paid on certain size accounts increases, maybe compensation rates are adjusted. And you have this phenomenon of like, the insured starts to feel that. And then you start to lose accounts, and then you start to lose accounts, and then XYZ producer becomes disenfranchised with where they are, and the grass is greener on the other side of the kind of other side of the road, and goes and joins another firm, and then it just kind of all starts to fade apart, and then that business kind of ceases to exist. It used to be there, and then it slowly kind of fades away. I think that's the opportunity. I think and and you know, with that comes rebirth, right? That maybe one or two of those producers starts an agency. This is what I learned. These are the pros of being at that firm. This is like the things I took, and then you know the cons of like how I want to do it differently. Now I would say like, but that's not the experience every firm has. I mean, some firms literally partner and thrive, like they're for people and
Yep.
they're bigger and stronger. So I'll take the con is like in that consolidation, you now have a local competitor, and if you're an agency owner or producer listening to this, you can answer what it's like for you. And you might have both examples in your market. You're now competing against someone that can sit across the table from a client and show them, you know, in real time on an iPad, hey, here are coverages, here are rates, this is pricing, this is what peer-sized companies. Oh, by the way, we work with 12 other businesses that are just like your business across the country. We have this industry expert, and I think having, if you're a producer listening to this, it's like, you know, a lot of that is not necessarily something the insured is ever going to feel or see or touch after that initial meeting. But that doesn't change the fact that that's going to influence the decision. And then some actually do bring those resources. And the, you know, the three-letter, you know, the alphabet houses, they used to be pointing their guns at each other in like the Fortune 500 and the Fortune 1000. And now they're like, hey, they're waking up and they're saying, to continue our organic growth, where's the majority of the wealth in America? It's in the middle market. It's in the mass, kind of affluent mass middle market. And so guess what? It's like they're turning their sights to the lower middle market. I mean, this is evidenced by NFP's acquisition, you know, selling to Aon. Now Aon has a, you know, a platform in the middle market, and they're not going to spend $13 billion to not continue to invest in that space. And so now you have a middle market player with all the tools and resources, you know, and those tools and resources only are as good as the people that are deploying them. So I think it's, to me, it's, we could sit and debate it all day long, but it's really, okay, it's a benefit, you know, it's a headwind, it's a tailwind, but like, how do you make it work to your advantage as an agency owner? And the scale is not tipped one way or another. So, you know, it's the kind of the world's your oyster, I think, from that perspective.
Yep. Well, so yeah, I agree with that. How I'm sure many people listening are experiencing this with a new entrant, you know, national large firm in their market. So how, maybe take this either way. What are you seeing firms that are still small, mid-size, and that are competing effectively against that? And then, if different, what do you recommend to people out there? How should they be thinking about competing against those that might be new entrants in their market?
Sure. I'll just say from like personal observation of firms that are clients that have done it well. And it starts with just like the tools that you have available, and many of which you can rent, that they're there inside of your systems or opportunities, and people just don't take the time to actually learn and use them. So deploying what you already have, being upfront and honest with the client, and then just servicing the heck out of them. And I think creating specializations around producers and who they're targeting. So they're having a lot of the same conversations. They're connected in terms of those communities. I think specialization is the best way to fight against scale in our industry. And I've seen it happen time and time again where, you know the coverages, you know the markets, you know the tools and resources that that client in whatever industry, whether it's a nonprofit or a church or what they might need, you know exactly what they need and their common hiccups and mistakes, and you can speak to them like you're a fellow business owner. And that is tenfold better than X, Y, and Z firm coming in with these resources, not from a relation perspective, dropping in somebody. And then I think it's just not taking the eye off the ball in terms of service, like the customer experience. And I don't think we've had this phenomenon play out long enough to really see it. But to me, like the world of service centers, and it's fine and it makes economic sense. But like, man, there's a level and a threshold at which you start to do that. I think we're going to see, if this strategy continues by some and how aggressively they're using that and outsourcing, which I'm a fan of embracing both of those in certain capacities in your business. and trying a little bits at a time on what works. But like you do that too much, I think that's going to have significant implications on retention, reputation, and there's a snowball effect there that I think that smaller independent agent stands to absolutely benefit from. When you think about someone selling their
Yeah.
business, they get paid, 3 years later they get an earnout, now they're retired, they have to keep their profits at a certain level, and they implement some of these strategies, and their customers are like, man, I used to call so and so and now I get a 1-800 number for my benefits, group benefits insurance. What the heck? I used to have
Yep.
like a client concierge, and so it just changes, right? So the market will correct this. That's the beauty of it. Like the market will correct it. And I think just by having your sign up and being known in the community and referrals, like I think in 5 years, business will just start to come. And by the way, there'll be less independent agents for it to be collected by. So you
Yeah.
kind of get like the benefit of being the last man standing, and I don't think it's last man standing. We're seeing regeneration in agencies in new markets. Like I'm very bullish on it. But there's no question though that consolidation is happening at a quick pace and people have to be aware of like how they need to compete.
Yeah. Yeah. And I don't know if this is something maybe more anecdotally that you might have heard or experienced, but certainly we've experienced it in the communities we're in where the business owners that we're targeting, that mid-market, I know that that's different for everybody, but
Sure.
those small to medium-sized businesses, it seems to when they understand who they're working with, that they would much more rather work with a locally owned business like they are, and that they feel like understands their challenges, or just even they know how hard it is to be a local business in their industry. And that resonates, that story and that messaging seems to resonate with those folks. And that, not that they wouldn't work with a larger national firm or whatever, but their preference is that they seem to want to work more locally. um is that a sense or a feeling that you have in conversations that again, it's a little bit anecdotally and just some of our experience, but curious your perspective there.
I think for sure, like relationships,
Still matter.
they still matter, and you're going through the same things as business owners, as local businesses. I just would say my encouragement to those firms that have that approach. One, I think it's a winning approach, but I also think there's a way to hedge against. I think you can have both and in the
Yeah.
sense of I'm that local agency. And I'm this business owner, but we also have access to X, Y, and Z association, or we have these carrier partnerships. And oh, by the way, here's our carrier rep, and we have direct access and line of sight, just like any other broker does. They're talking to the same people, you're getting the same coverage. You have to communicate, whether you're part of an industry association or whatever it might be, you have to communicate scale and size. That like in untroubling times, like I'm going to be protected. Like they're going to be here for me, and they're not the little guy and are going to get pushed around, because that's a narrative that I think that's a natural. Hey, there's more safety in putting my money with a big bank, because
Yep.
if we have a the bank, that local community bank, I'm a little more concerned about that, right? And like the reality is, it's probably not the phenomenon, but like that's people's psyche. So I think that is just a key thing. And then also, like, okay, if you are that local firm for local businesses, I think it's a great winning strategy. But we also have to wake up and say the consolidation that we're seeing happen in the insurance space is happening in every other
Yeah.
industry. Like
Yeah. For
institutional
sure.
investors and private equity, every year I do evaluation for a client, do a lot of them. I look at their top 10 accounts and I'm like, well, what happened to X, Y, and Z? Well, they got acquired and sold to this aggregator, just like what's happening in insurance brokerage. And that's hard to backfill that, right? When you have that relationship, you have 20 years with those people. And so like, what are ways that as a local agency, like that would be my hope and dream, that like I don't have that phone call when I'm doing that valuation, like, yeah, we lost it. And it's alternatively, actually, we were able to keep it because we were part of this industry association. We were able to demonstrate national scale and size, and even global expertise with X, Y, and Z affinity network, and I think that's a very important offering that local agency has to have for those businesses of size and scale. I would say as you get to the middle to the upper middle market, I think at the lower end, that's not a problem. I think that that strategy plays so well. And candidly, it just is a lot of fun. Like you're
Yeah.
just doing business with people you know and you like and that are in similar stages of life.
Yeah. Well, I think what you said there, it's a both strategy anymore, right? I think it's at one point in time, certainly just being able to take your client to the golf course once a month and build that type of a relationship was probably enough to maintain, a long-term client. Um, I don't think that anymore. I think that you do need to do those things that build an effective relationship with your client, but you also have to show value in the areas that matter to that client, and that's everything that you just walk through. And I love the thought of figuring out ways that you can show size and scale. I think that we often underestimate that because at the end of the day, it's not that, and I'm saying we, putting us in this bucket of the smaller mid-sized firms, don't have the capabilities and the knowledge and the expertise to do this type of work or this type of business, but we're bad at showing it. We're bad at being able to walk that client through the story of all of the resources and everything that we have that make us just as valuable, or if not better, for this client than somebody else. Um, and so having a thought process around that, I think is a great recommendation for everybody of understanding how you can proactively show clients that scale and resources that you do have access to, and how it can impact them and how you can compete at those levels. Because that is definitely what's being thrown around is, we can go to XYZ carrier and negotiate better rates because we got a bigger book, or we can, you know, we're going to get more claims covered, or all the things that you hear,
Right.
that are being said against. And I think just proactively thinking about how you're going to handle those and creating a unique value that you bring is key to kind of fending off those attacks. But um, yeah, so I think that's great perspective. What are you seeing out there, shifting slightly? What are you seeing out there in folks you're talking to just around the hard market from a pricing, a coverage perspective? Because I know that this is obviously a hot topic with everybody, and kind of where are we at with it, and what are you hearing from folks you're out talking to?
Yeah, so we work with agents and brokers all across the US. So like in certain markets, it's oh my gosh, how is this happening? It's still continuing to rise and go up, and it's by line of business. And then in others, it's softening a little bit or it's stable. Like I wouldn't say I'm hearing anywhere like, oh my gosh, can't believe pricing's doing this. It's like so like we're in a soft market. Like that's not the case. I think what we're seeing is I think the market hardening on the PNC side of the business has slowed. I think we have seen a decelerization in the hardening market. That doesn't mean that it's not still hardening, it's just not
Yeah,
hardening at the rate at which it was hardening. Um, which is easier for client communication, et cetera. Personal lines is still a mess. I mean, I think you're still seeing faster from like a more hardening market when you get to personal lines. We're seeing that in the organic growth rates of businesses. And then, benefits doesn't have necessarily like, like the PNC does in terms of like the hard or soft market. But we are seeing a tick back up in benefits growth rates, who were really lagging behind during COVID, especially as exposure bases of clients and stuff. And so I think what we're stepping into is like a maybe like what could be more the new norm of maybe if you look at a historical average of the past 30 years in terms of price increases. I think we're probably going to see a consistent year over year um, higher uptick than we have over the past 30 years. But I think it's not going to be as drastic as it has been. If you think about like 2021 and 2022, kind of heading into 23, where I mean, we were looking at, I mean, crazy, with carriers taking, 130% loss ratios,
yeah,
having to right the ship. But yeah, I mean, I think personal lines is still catching up a little bit there. I think on the PNC side, I think we're kind of there, and we're going to see some more leveling. That would be my kind of estimate, but you know, who knows? We're a few catastrophes away or something from a macro position changing that, and there's a lot of factors that go into it. But I do think I've got some slight nice tailwinds behind us, but I also would use it as a wake up call for agents and brokers of being like, you probably got a little bit above normal tailwinds behind you. So are you taking those excess profits and, not just sitting and hanging out in the good times, or reinvesting those in growth when it does cool off? Do you
Yeah.
have the seeds planted to sustain the growth rates that you're experiencing today? And a lot of folks don't. I think they've just like, man, things are good. It's like, well, why are they good? I don't know, they just are. It's like, okay, well, think about that, and it's like, it's rate. And a lot of people are asleep at the wheel.
Yeah. Yeah. I mean, we talk about that a lot internally. Obviously, the hard market, it's positives and negatives, right? I mean, it's a lot more work, it's a lot more stress internally on teams, and you're having to remarket a lot. There's non-renewals, there's all those things that go into a hard market. There is the flip side that if you can keep that business, you're getting, higher commissions and things like that. And so, um, so the most effective firms out there that you guys are working with, how do they approach the hard market? You just mentioned like you're trying to tell people to, make sure you're being smart about this and reinvesting for the future. What, if you looked at your guys's clients, those you're talking to, the kind of best firms in your mind that are doing the right things right now, what are they doing? What are they focusing on?
What I hear consistently is just kind of communication.
Yeah.
It's 6 months out. It's all the stuff that, you normally talk about. It's just over communication. And then also coaching on, hey, here are the things we know we're going to get hammered for on the next renewal if you don't change these things or put these practices in place, and being that advisor. So when they don't listen to you and you deliver that crazy price increase, you're able to say, hey, this is what I told you why we should do this. Like, I am helping you be a consultant and an advisor here. And then sometimes it's also like being confident enough to be like, we know that we've done the very best job. And like, if you disagree with this pricing increase, then like, go.
Yeah.
Like, you can be somewhere else, go. And having really open hands about it, I think diffuses like the tension and stress that folks are saying. Like, wait, what? You don't want to? And like, no, that's fine. Like, I'm 100% confident. If you think someone else can do a better job, but I think it's just over communication. It's also making sure that maybe it's that extra support staff that they're
Yeah.
maybe making that they're hiring. I think that's super wise. It's like, yeah, your revenues are up. So's the workload on your staff and your people. And like, if you're on the fence, make that additional hire, and you're going to service your clients, you're going to be better for it. So it's that service plus consultation, and that kind of simple formula is what we're seeing. You know, I would say that's what I'm hearing from our clients and those leaders of those organizations.
Yeah. Yeah. No, that's great. I would echo that and agree. You got to be cognizant on the hiring side, to your point, that there's going to be a cooling off at some point. I don't envision rates going back down 20%, but
Yeah.
there will be a cooling off, and you want to be smart about all of that. But it's a great time to get ahead of it and to get properly staffed and be thinking about the future. But so on that note, kind of how do you guys coach or talk to firms about strategic planning and how to be thinking about these things now? I mean, I know that you have a great insight into that, into different firms and how they're doing it, and you coach them. So when it comes to, I'm thinking about that now with the everything we're dealing with. I think planning for the future, uh, while we got to deal with the fires at our feet, is never been more important, because again, this is either going to continue or there's going to be correction. We need to have strategies in place for both, because both are, not status quo exactly for what the last 15 years have been. So how do you guys kind of work through that with clients?
Yeah, one, the step one is just helping them step away and like think about the business as opposed to having their head down in it. So that
Get
means
on the
like,
business, not in the business. Yeah.
yeah, for sure, right? And so a lot of times that means like with clients, it's like, hey, come down to Atlanta. Let's spend a half a day. Let's get in a conference room and turn off our phones, and then let's map out the strategy. And where do you guys want to be in 5 years? Where do you want to be in 3 years? Do you feel like you have the players in the organization to get there? Are you making the right investments? There's a certain amount of chips you have to make bets. And I view our role as that kind of trusted advisor slash just the person that's set in the room with a lot of really great agency leaders and had the benefit of just learning and listening from them that have taken a business from 5 or 10 million in revenue to 100 million in revenue. And how did they do it? And, what lessons did they learn, and being like, I get it. I see why you want to make both of those investments, but let me tell you a story. And is that a strategy you want to do? And it's kind of like, it's like providing perspectives and letting people like find what they're passionate about, and like,
Yeah.
almost having the permission to do something that they knew they needed to do anyway. And to just give them the encouragement to be like, actually, that you're not crazy. Like, that makes a lot of sense, because it's
Yeah.
lonely at the top. I mean, it is lonely in these organizations at the top as you're leading these firms, and like, and then I think our strategic planning is relationship based. It's like, now we know your goals, like we know what you're trying to achieve, and when that moment comes up, or whatever it might be, it's a phone call or conversation away. Be like, yeah, that's what we talked about. That's awesome. Or really, that's not quite where we were. So I think that's the best way to do it, is like, as we think about strategic planning, and it's metric based too. It's like, hey, this is what affirms your size, you know, take, you know, take occupancy expense as something as simple as that. Be like, we're trying to figure out our office strategy. We're coming back to work, we're spending 5% of revenue on our rent. We're in 3 days a week. Like, how does that feel? Like, well, it's actually like, it's a little high, and here's why,
Yeah.
and here firms in your size, but when you get here, you can grow into it. And so I think providing metrics with kind of strategy is where we try to provide consultative advice. But it comes with just starting with asking questions and listening and learning the DNA of the agencies, because that's the beautiful thing about this business. Is like, strategic planning, there's no one playbook. There's a
Sure.
lot of different ways to get there. Just pick what you want to pick, what's most fun, and then do that.
Yeah. Yeah, exactly. And I would not, or I would underscore that a ton. Just, I'm a big believer in, I refer to it as coaching, and, almost paying for other people's experience, right? And, you guys are in a unique position where you get access to the experiences of all of your clients that you can then distill down and say, hey, here, this is where you want to get, as you mentioned, this is where you want to get. And here's a few ways that we've seen other clients do it. Here's what we think worked. Here's what we think they could have done better. And then you're much more educated on what that next step could look like when you're making some of these big decisions in your firm, as to where are you going and how are you going to get there. And having that outside perspective of the been there, done that a few times, is so valuable, and can um, accelerate your progress like you wouldn't believe. And so I would echo that wholeheartedly. Um, so getting down to kind of the end here, is there anything that we haven't talked about, even things that you guys do that have been resonating recently, that you feel like would be good to kind of walk through with everybody before we wrap up?
I think is where we sit in the world right now. I was doing a webinar yesterday, and I'm I was with an agency last week, and I was with their people, and there's a lot of like just turmoil and divisiveness. We're in a political season right now, and like anxiety and where the world's headed, and different candidates have different strategies on how they communicate, like fear versus opportunity, and um and that's an age old story that we've seen forever, right? And
Mhm.
I think, but we know, I mean, I've got two small young kids, and like anxiety, it just like rips through our culture, and it's something that hasn't been talked about, I think, in our culture, like historically a ton. Now it's like very much at the forefront, and I think we're seeing that in the workforce. Um, and I think we as an industry are missing the opportunity to like provide career and provide stability for folks in the insurance industry, of what was used to be in like yesteryear perceived as boring and lame, of like actually stable and
Yeah.
recession resistant, and like in a really cool way to missionally serve people and protect people's assets tomorrow, today, and like doing those things, like I think is like super cool. And I showed this chart yesterday. It was like in 2009, our industry declined at 2%. And then fast forward the clock through COVID, through this recent period of hyperinflation. And it's like our industry basically, we declined at 2% in '09, and it's grown every other year coming out of the Great Recession since then, up and to the right. And oh, by the way, profit margins of agencies have increased over that time period too. And that's us tracking 150 to 200 firms every quarter and their growth. And it's like, I had a client said, I asked him, he's like, he hired, said this yesterday, he hired 24 producers in the past year. And
Jeez.
I was like, whoa, what did you do? And he fired half of them because they weren't performing. And he communicated that. He was like, hey, look, these are the expectations. Yeah. There's big opportunity, and we fire fast. And within the first year, they were gone. And some firms don't have that strategy, and that's not a prescription. But what I asked him, I was like, how did you get 24 people to like sign up? I mean, this is like a $35 million revenue agency. And he said, he's like, I just talked to him about like our industry, and like we're here and we're built to last. And like the client I was with a couple of weeks ago was like, I asked around the room, like, how many of your sales force in this room, what percentage of the room has been hired in the past 3 years? COVID, inflation, when a lot of businesses weren't hiring, over half of the hands in the room went up. Yeah. There's about 350 people in the room. It's like, that's cool. Like if we're going through that and we're hiring, like, and very few during COVID people laid off folks. And so I just think it's a story that needs to be just like the mission statement of your business. Like, what is your mission and vision of your business? And every meeting should start with that. Every client conversation should start with that. Like, and remind people what a great industry this is. So that's just something I've been thinking a lot about lately, of like firms just successfully just being good communicators. And too often we talk about the hard market and the difficulties out there and kind of slugging through it. And I think that's just my encouragement to where I can sit, just to provide that to agents and brokers that are business owners, to be like, man, you're providing your employees and your customers like an amazing offering, and know that, and just be encouraged from that perspective. So that's just one thing I would just say as we wrap, to be communicated.
That's a great insight. We just filmed one, or last episode was one with Andy Bassett on kind of telling your firm's story. And, this is almost telling our industry story, which is just as important when we're recruiting, certainly team members, but also sometimes, retelling the industry story to clients and prospects that might have, gotten a little bit stale on the insurance industry and what the actual importance of it is and all the things. And so, yeah, that's, I think, phenomenal perspective. Well, cool, man. I appreciate the time. I think everybody's going to take a lot out of this one. I'm excited to get the feedback. And with that, we will see everybody next week.